Well, hey everyone, we're live, and it is our first Q&A after the holiday season in the new year in 2025. We're pretty excited. Karen will be joining us in just a second. As any good realtor, she just took a call and she had to go hop off for a minute. But I'm super excited to speak to you today with Jivan Sanghera. Jivan Sanghera is one of my best friends on the planet, and he's also one of the best, if not the best, mortgage broker on the planet. Let's call it what it is. And we thought, what better way to kick off the new year than a conversation about kind of the market and what's going on out there and what we're seeing in a lot of different ways, because there's a lot of question, a lot of concern, a lot of uncertainty, I guess, out there. I think from a basic standpoint, Jeevan, why don't we start with like, what the heck is going on with mortgages right now? Like, as far as like the market as a whole, the Bank of Canada doing what they're doing. What is your take on what could be going on and what the future holds over the next, let's say, 60 to 90 days?
Well, first off, thank you very much for the invitation. Happy New Year to all the watchers, and God bless them all. Um, you know, the first thing I'd like to address is our friendship. I appreciate your kind words. You're really good at what you do as well, bro, and that's what really brought us together as friends in the first place, right? So, I'm proud to have you as my customer. I'm very happy as one of your former customers as well, and Karen's. So, the good thing about being good at what we do is surrounding ourselves with people that we consider to be on par. So beyond our friendship, I've always appreciated your professional courtesy and your opinion on what some of the crazy shit I come up with. To that effect, thank you for the invitation. To bust straight into it, we've all seen the downwards pressure on prime. And you know me, Justin, from day one, come hell or high water, somewhat to our detriment, I have been a fan of variable rate mortgages.
Yes.
And the reason is that they've always been directly tied to prime. The one time I really started to question myself in that theory was over the last 2.5, 3 years. And that's really because of, the unprecedented interest rate increases that we went through as people. And I know they affected your family and they affected
Mhm.
my family and they affected countless numbers of Canadians because, quite frankly, the Bank of Canada completely overshot on the amount of prime rate increases that they did.
Mhm.
Before any of that happened, before the first prime rate increase, what was that in 2022?
Mhm.
September 2022.
Yep.
In September 2022, Tiff Macklem came out, the Bank of Canada governor, and said, hey, this inflation is transitory. It's not true inflation. And, to that effect, we need to ride it out. And then politics being what politics are, 60 days later, he changed his tune and Jack Prime.
Mm.
30 days after that, he did it again. Then he did it again. Then he did it again. When I used to talk to people about variable rate mortgages and they were like, well, what if the rates fly through the roof? And I was like, what alien invasion / world war is going to take place that would cause that sort
Or
of
what pandemic?
right? Or what pandemic? But the thing is we talk about the pandemic, but it wasn't the pandemic itself that led to all of that liquidity. It was a concerted effort by the government to reduce borrowing costs and make sure that the economy stays stimulated, which at the time made sense. But they also didn't need to go down to a 0.25% prime, right?
Yeah.
So they weren't prudent on the way down, and imagine that they were not prudent on the way up. So, a lot of people talked to me and they said, well, I think you and I even talked about it, where it was, well, the first time they decreased prime. And it was like, oh, wow, is the market going to take off? And it's like, no, it's not. And then the second time they decrease prime, is the market going to take off? No, it's not. Because those two removals were just those final two nails in the coffin that they were removing. The market was already dead.
Mm.
And so now it's these last rate cuts that I have considered to truly be some stimulus for the marketplace. So now we are seeing people's appetite for larger debt to start to increase again.
Mm. Well, and that was what was happening. You'd see this, they'd reduce prime, and you'd see this little kind of glimmer of like people going, ooh, maybe. And then they'd go, wait, not yet. You know what I mean? Like,
But
so,
that's because those people have realtors that are being honest with them as well, right? So I know that you and I have talked about things and you've said not yet. And
mm,
it's not because you don't want me to transact. That farm that farm excluded. We'll leave that for another podcast.
ooh,
Right? That's that'll be the boxing match, not the podcast. But jokes aside, people are being prudently cautious.
yes.
Right? Because, and don't get me wrong, like in that last election, the Liberal Party offered us, and promised a whole bunch of, workarounds to make the market more transparent as a matter of offerings and to take people that shouldn't be a part of the buying process by, one thing that was really an issue even in the time of the run up during COVID is that, you had so much fraud in the system
Mm,
that even when you were competing against buyers, you were competing against the standard pool of buyers that was meant to be there. But then you were also competing with a large pool of buyers that didn't qualify to be there, but had
mm,
gotten the assistance of an unscrupulous person to fraudulently put themselves in that position. So when at that point, it's almost a double cohort of market, and you have people that are thinking that real estate is a runaway train that they're never going to catch unless they overpay and buy now. And and you get into a situation where, what did you think was going to happen? And now, in true political fashion, there's been no change to the offer process. They had mentioned that they wanted to remove the stress test, even for customers that are on mortgage renewals.
mm,
And then OFSI in the middle of December put out a notice very quietly to its lenders to say, hey, even though this rule is out, we continue to expect you to be prudent. So guess what? Lenders were like, hey, that's great that this change has come down the pipe, but we're still going to do it at contract rate plus 2% on a
mm.
switch, right? So what are you doing there? You're removing choice for people. And imagine that you have no choice of where to go, no real savings to happen by switching, and you're expecting your banker to give you a great rate. Considering considering that rate environment is a construct of that banker.
Right.
So the only product that is going to allow for any sort of interest rate upside in the next 60, 90, and quite honestly, in the next 700, 800, in the next 830 days, so 2 years.
Mm.
Um,
Good math. I love it.
no, it actually, the math is wrong at
It's
730.
totally wrong, but it's fine.
The math is 730 days.
Yeah.
Sorry, it's early. But
Yeah.
in the next 730 days, 2 years, we're expecting a lot of downwards pressure on prime. So much so that it's reasonable to expect a prime rate of 4.95% by, March.
Mm,
Uh, another two prime rate decreases. But realistically, RBC's banker is predicting a prime rate of 4.25% within the next 2 years. So if you're taking your, standard prime minus 60 to prime minus one discount, you're looking at a rate of 3.65 to 3%,
right.
you know, over the next couple of years. And if that's the case, why in Fungul's name would you go with a fixed term today?
No.
And it's like, people talk about, the security associated with a fixed payment. Well, guess what? We have variables that have fixed payments, right? So, and in those situations, in a declining rates environment, those products become amazing because your budget adjusts to that higher payment, but all of that extra money every month is just going
Goes
to your
towards the equity.
principal,
Yeah.
right?
Yeah.
It's just
Yeah.
like, we even have customers coming up for renewal and we're saying, hey, is there any debt that you want to wrap in? And a lot of times the response is, oh, well, I want to, but we'll figure out a way to take care of that 60K in consumer debt on our own. And it's like, stop, no, and don't, right? Because if you were to just take that debt, and let's be real, everybody's paying 20% on their credit card. You're paying between 13 and 20%.
Yeah.
If you were to take that same interest only payment at, that 75,000 year amortization of your credit card payment, of your credit card balance on the minimum payment, even if you were to just take that minimum payment and add it to your mortgage, you've now got this debt functioning at less than 5%. So you're in a situation where you're actually reducing your debt burden instead of just maintaining it. And, I've talked to customers that, and you never know what's going through somebody's mind when they're going through these transactions, but I've talked to customers that feel like it's a form of self-discipline for them to
Mm.
not include it in their mortgage. And hey, I put myself in this bed, so I should sleep in it. And it's like, yeah, you put yourself in this bed, but you've got $1 million in the wall. Take 20 grand of it and discharge this debt.
Yeah.
And and you see people go through this perpetual cycle, and it's like, no, the only freedom from that cycle is to actually one time rip off the band-aid, come up with a payment structure, and change your habits, right?
And you know what's funny about a lot of it though, and to sort of defend the general populace a little bit here is that there's not like a one-stop place where you can learn about this stuff or get, I mean, the place is you, like the play people like you,
I was gonna
right?
say,
Good
sir, home
people like you
mortgage,
that
not
have,
you.
yeah, but that's the point is unless people knew who you were or know you, and you can like, unfortunately the world is finite in that world. Like you have to get your
For sure.
name out there and people get to know you, but that's it. Like you need to find good people. And I think we're so full of, like, talking about unscrupulous agents and things like that. The world is full of unscrupulous people. And who do you trust, and how do you get to know people, and how do you understand that they're telling you the right thing? I've dealt with a few things myself in the last year, and finding the right people to give you the right advice in a lot of ways is very difficult to do. And trusting those people is very difficult to do because as humans, we've been taught to like stranger danger and things like that. And so it's very difficult to find the right advice. And when I hear it coming from someone like you, so from my end, knowing our followers and the people that follow us are very trusting of us and we appreciate their business and so on, understanding that when Jivan says what he says, one of the things that I would suggest to people is I trust my personal family finances and my money with this man sitting next to me. And so I want to just drive home the point that, like, this isn't a bullshit conversation. This is almost a conversation we would have together at Chuck's one day.
For sure.
You know what I
Absolutely.
mean? Like
Post Leaf game.
yeah,
Absolutely.
post Leaf.
Chuck.
Oh, so the idea of it all, the idea of having this conversation openly to the public is like opening the door to our personal lives and what we talk about just together, because that's who we are, and
For sure.
because I trust this man implicitly, and my family trusts him. So, I think it's hard to know where the information's coming from, but I like the idea that, yeah, I was going to ask you, like, if you were putting someone in a or giving someone advice today, the advice goes back to, we're talking variable again. I know it, what we weren't talking about it 2 years ago
I know for
because
2
of all the
years I've had
interest.
to sell 3-year fixed, bro, and it's been
Yeah.
so gross.
You
Uh,
felt so icky about it.
it's been so gross, and it's like I'm even talking to my lender partners, and they're telling me how their 5-year fixed rate paper is flying off the shelf, and I'm vomiting a little bit in my mouth when they say that, because it's like, and even when I'm asking my rep and I'm like, "What?" Right?
Yeah,
Like,
yeah,
how
yeah.
is this possible? But the thing is that so many people wanna sell based on your fear. Right?
Mm,
So if your fear is, hey, if payments go up, I won't be able to manage, right? And that could be a real and substantial fear. But the thing is that if you're in a locked payment variable, even if prime does go up, your payment's not changing. Your amortization is. But like, on one side, I'm really glad that we had a large book of our customers in this in the revolve, like the adjusting payment mortgage, meaning that even though prime was flying through the roof, they were sticking to their timeline of a 25-year amortization or
mm,
20-year
mm.
amortization. But the benefit for people that had the static payment was that, you know, yeah, rates went through the roof. Yeah, you were negatively amortizing. But the one really solid thing that the banks in Canada did is they didn't really ram it down anyone's throat, right? They just let the amortization go. And people were, reaching out to me with written amortizations on their statement of more than 70 years all of a sudden. And the panic And I'm like, whoa, no, you're not going to be in this mortgage for the next 70 years. Just like the 0.25% prime was a moment in time, this ridiculous prime of 5.5% is also a moment in time. So let's let it work its way through the system, and you'll see those payments start to come back down.
So
And
I have a couple of comments to that point. The idea that a lot of people are saying, well, I'm going to wait till the spring, which I understand the concept of that. And I just want to hammer home a couple things from my point of view, and maybe you can kind of add in here. One thing to consider is like the average increase in prices year over year, in my opinion, based on some fact, because obviously we've had a blip in the road with COVID and things have come down and up and down and all over the place. But when you look at a 50-year average, it's about 5 to 7% increase a year, which is pretty modest. Like that's not ridiculous, quite frankly. We've had a really good market for a couple of years here and there. We've had like the beginning of COVID, like it was going nuts, right? It was going, we had no supply and tons of demand. In 2016, 17, it went nuts and we had no supply. And then all of a sudden we had way too much supply. So it kind of tampered the market. So there's been a few blips, but on average, we're talking 5 to 7% increases. And the mindset of waiting till spring, I find, is a little bit illogical in a couple of ways. One, you're going to be against more people on the market. That's the first thing. Like that, like this, the spring market that everybody shoots for just pushes more people to market. So then the logic then behind it becomes, well, if you're going to wait till spring because you think like you're going to get more money, you're going to be against more people. That'll take longer to sell. There's a few other challenges with relation to that, But then why not wait till the fall? Because then the fall, theoretically speaking, you could get more money because as time goes on, prices typically tend to go up as the interest rates typically will come down based on what we're talking about here. So, I mean, I
it's
think
a
at the end
very
of the day,
reasonable expectation,
yeah,
right?
that's a reasonable expectation right now to figure that the Canada Bank of Canada is going to reduce their interest rate. Why don't we wait? But then it becomes that game of like, well, when's the perfect time?
It was
Right?
yesterday.
It is yesterday. Like, this is my point. You're not, I don't think there's anybody that A has a crystal ball to tell you exactly what's going to happen. We have our best guesses based on the things that we've been through in our lives and the things that we've experienced and the logical research that we do and the things that Jivan does. I mean, we're talking about Jivan's been on CBC, like talking about this stuff. So like he's done the research to know that people like that will bring him on to give him information. So at the end of the day, we make these thought processes based on the information we have, but we don't have a crystal ball. The second point though becomes like, if your dream house comes along, i.e., a farm that may or may not have come along, and you miss it.
It's too soon, bro. Too soon.
Sorry, sorry. How shitty does that feel? Like, you know what I mean?
Very,
Like,
very not good.
right. So my point is like, if that house comes and you're like, no, I'm not going to do anything till spring. What position are you putting yourself in now? Right.
Yeah.
Um,
That farm thing, man, it still brings a tear to my eye.
I
I'm gonna
know.
pause for 1 second and just say hi to my friend Karen. Karen, happy New Year, my friend. God bless. It's nice to see you.
Nice to
Uh,
see you, Jivan. Thank you
that's
for joining us today. Thank you for being
yeah.
here.
We've
Well,
already had a huge
and
conversation without you.
I can still stick to my planned date of next month as well because a lot of things are changing. If you guys would like me back, but Justin, what you said is very poignant, and historically speaking, those have been actual events, right? Where the market saturation and then supply and demand and interest rates changing and a ton of liquidity in the marketplace, and all of a sudden, prices were flying through the roof. One major difference about these upcoming interest rate decreases is that a lot of the bonds that were issued in 2020 by the Bank of Canada are not being renewed. So they're looking at taking, I think the round number is about 300. But there's upcoming bonds, and I want to say the number might be as high as 300 billion in bonds coming up that they're not going to renew. So where normally with everything that's taking place, we should have more downwards pressure on fixed rates today than we do. But the thing is that with that quantitative tightening, where they're pulling money out of the system, what happens is that it actually puts upwards pressure on interest rates, not downwards pressure on interest rates. So I did some research before we were getting into this call today. And, at the beginning of December, the 5-year mortgage bond was at 3.06%. Today, it's at 2.96%. At 2.96, we've only had a 10 basis points decrease in the bond yield, but we've had prime drop 50 basis points in that time.
Mm.
Right? So a lot of people are expecting those two markets to move in kind, but they don't, right? Because at a fixed rate today of, let's say, 4%, we're expecting to have a variable of 3.5. Because if you recall, the variable is usually about 50 points cheaper than the 5-year fixed. But in today's market, the variable is still 50 points more expensive, which tells us very clearly that, the prime rate definitely has more to give, but that the fixed rates might be starting to level off. And I think it's reasonable to expect fixed rates to level off between 3 and 4%. So if
Wow.
somebody's getting a fixed rate, and Karen, you've been around this game long enough to know that 3 to 4% is historically hella cheap money. And once you get, even for our variable rate mortgage customers, once we start getting back into talking to about rates that are in the threes, we're not going to ride, we might not ride it all the way down this time. Maybe it is something where, we are forced to change our own sort of strategies and suggesting conversions to people because, watching, and I was on the bus too, and I refused to get off the bus, but watching those rates rise and watching my own mortgage payment go up by $300 in a month, like that's real money.
Yeah.
Um,
And
and,
it's
and
pure interest.
all interest, and that's the worst
Yeah.
part, right?
Yeah.
Is that forget, and again, I was in an adjustable payment mortgage, so my payment was adjusting to maintain my amortization, but I was having talks at home like, okay, do we sell an investment property? What do we do? And those are real things that Canadians are facing. So the only thing I'm saying is as for this upcoming spring market, I believe that there's definitely still going to be some great deals for people to get, because a lot of people, especially in the higher price points, 1.5 to $3 million, that pool of buyers is not as large as it once was. And even as a matter of a big thing that the government did this year was, or last year, effective now, was changing the max insurable mortgage. In my opinion, they should have pushed it to 2 million, but they pushed it to 1.5, meaning that now those move up buyers that were stuck at that 999 cap because they didn't have the 20% down can now participate in that market. So you can now buy a $1.5 million house with $125,000 down. And, that represents a down payment of what, 7.5%?
Mm.
I think. Yeah.
Yeah.
Me and my mentor math today, we don't.
It's a significant change. It's a
Yeah.
significant change.
Right. And it's like, and so that's going to allow a lot of those people to get out of a townhouse and into a single family residence, and which is very often everybody's goal.
Well, and I think this is also playing into the idea of taking those townhouse people, moving them up, and now the immigration policies that Canada has put into place and bringing people into the country, and that which is a larger conversation and a larger issue because we got too many people and not enough houses. Hopefully, bringing those people in and putting them in the townhouses, and you know what I mean. It's this cycle I think that they're trying to kind of continue
Well,
to.
I'm glad you mentioned that as well, because another thing I wanted to make sure I spoke about today was in 2024, Dougie and his government changed the zoning rules in Ontario on the municipal level to say that you can put a triplex on any lot.
Yeah.
That's huge.
Mm,
That's huge,
huge.
especially in a NIMBY town like Burlington. And
Yes.
NIMBY, for those that don't know, is not in my backyard, right? But for
I
the
love it.
NIMBYists, right?
Yeah.
There's nothing they can say about it now,
No. Yeah.
right? So, I did some research on ADUs, accessory dwelling units. So now, starting on the 15th of January through CMHC, you're going to be able to refinance a home that's worth up to $2 million to add accessory dwelling units,
Mhm.
right? You don't have the huge bottleneck of zoning variances anymore. You don't have the huge bottleneck of, asking for your city's permission. It's more just the regular standard bureaucratic bottleneck of trying to get a permit.
Yeah.
Right.
But but Burlington's working on that, and I know other cities are working on increasing the speed at which they can provide those permits. But if you're looking at that, and let's say you can finish your basement into an ADU for $100,000. I did the math. An average two-bedroom basement, and you would definitely be able to confirm this better than I can, is renting of anywhere between 18 and 2,500 bucks a month here in Burlington. If you were borrowing that money on a 25-year amortization, it's costing you realistically about 500 bucks a month, 550 bucks a month. And
So you're
you're
making a profit.
from day one,
Yeah.
from day one,
Yeah.
right? And this is where Dougie and the guys, I love calling him Dougie because I'm a big fan of Doug Ford. I don't care who hates me for it.
Yeah.
But his team has brought this out to us because they recognize the shortage and they're doing whatever they can to get rid of the NIMBYs and say that no, not in my backyard, in your front yard, in your next door neighbor's yard. We need this sort of density.
Yes.
And gone are the days where we can afford to cut Burlington into 65 by 150 lots, for the 10, 15 people that can afford to live there.
And Canada has a very high level, like a large amount of like conservation land. So there's not a lot of extra land to go to anymore.
Oh, and
Like we've
and you get
expanded our boundaries to its max at this point.
dude, for the fact that if you were in Burlington, Ontario, and again, I completely understand the environmentalist side of things. I understand that the need for green space, right? But when you've got to cut to remap our green belt and include it up to number one side road, do you know how many houses could be built? And if they were to actually start to expedite the building permits, I had the absolute privilege of being a part of the mayor's red carpet task force on reducing bureaucracy in the building process. And I remember sitting there at the table, and I was blessed to be at that table with a lot of developers and listening to their story. And when they told me that it's reasonable to expect it to take 8 to 10 years to put a shovel in the ground in Burlington, I thought,
That's bizarre.
so it's like, hey, we've got a fire. We haven't built a fire station, but we'll have one up in the next 5 years or so. Till then, let her burn.
Well,
Right?
so that it's so true because Tremaine Road in Dundas, from actually Bronte Road in Dundas to over to almost to Appleby. Well, Appleby, there's a plaza, but Argo Developments has owned that property for more than 10 years.
On
And
the northwest
they
side.
are
Yeah.
now just putting not the shovel quite. They're 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 putting lines up and they're doing surveys and things like that up there. And oh my God, you know how many homes are going up there? Close to 3 to 5,000.
But are they going to fall into Oakville?
No,
Oh, that'll be nice. It'll be the
no.
first set of new, other than Alton West. It'll be nice to see another project that has some real opportunity
Impact.
for people, and it'll be higher density than we're used to in Burlington. But again, it makes all the sense in the world. You drive up, and you mentioned Tremaine Road, Karen. The second you cross Bell School Line and Britannia and Derry, all you see is houses. And Milton used to have that issue of not enough water. Well, you know what? They built the infrastructure when it was needed, and now they are exploiting it. And look at the size of the population growth in those cities. Look at North Oakville, right? These places aren't having to increase property taxes as much because they're building their base of actual constituents. And here in Burlington, for whatever reason, um, it's just not as prevalent. And it's really unfortunate because cities that were smaller than us a decade ago
Yeah.
now have 20 to 30,000 more people than us. And it's, again, that's a municipal politics thing, right? And
Yep.
and if you want to solve the problem, you got to get to work on the actual problem, and that is the bottleneck of time.
Yeah. 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 But as far as financing is concerned, in regard to all these new builds, explain that to our audience in regard to how it works, because I don't think a lot of people understand how it works. and as they really don't understand how the government works sometimes. So, can you explain that to them?
Absolutely. Now, are you talking about on the development side or just on
Yeah,
the
yeah.
purchase?
No, I'm talking about on the buy side when a buyer says, "Oh, I want to go buy a new build. Let's go and check it out. Let's do it." So how does that work?
Sure. So, the benefit of a new build in a traditional market is that you're getting to buy it at today's price and then close it at today's price a year to a year and a half from now, or whatever your build time is. But the one thing that you have to be very careful of is that the interest rate that you're signing up for, is it going to be the same when it's time to close your deal? And, a lot of lenders have 18-month rate holds or
Yeah,
24
yeah,
month rate holds. And it's a prudent move to get one of those in your hands. Now, quite honestly, I can't provide a rate hold longer than 12 months, which is on purpose by my lender. See, that's the thing about being a broker, right? Is that not only are my lenders my suppliers, they're also my competition. So there's certain products that they just keep for themselves, and you don't blame them for having a business strategy around that. But at the end of the day, so if somebody is buying a new house today, normally there's a tranched, and I call them tranches, but there's a tiered deposit format
yeah.
where you have your first deposit and then your second and your third. Usually, what is it, Justin? 30, 60, 90, or
Usually that. Yep.
yeah, or 60, 90, 180.
180. Yeah, exactly like that. Yep.
But
So
what ends up
so
happening is you end up paying
let's
about
just go back.
20%.
So let's go back a step, though, Jeevan. Sorry, I want my our listeners to understand that to buy a new house, you still have to walk in there qualified, right? So
With more change in your pocket than you would require to buy something that's already up,
yeah,
right? Because that's the one thing people don't realize, is that even under this new program where CMHC is allowing for up to a 30-year amortization for first-time buyers and for any buyer of new construction, you still need the 15 to 20% in deposit during the construction process.
mhm,
If you can't provide that, you're going to be in default of your contract, and you're going to lose the 5 to 10% you put down in the first place.
mhm,
Right? So there's very few builders that can afford to take a 5% deposit and begin construction. If you take a look at all the projects in Toronto that are being shuttered condo wise, we went from having the most active cranes in North America to a basic shutdown of any new construction,
yeah,
all because of interest rates and liquidity, right? Because even when these builders were doing their models a decade ago or 5 years ago, nobody, and I mean nobody, was prepped for a 4% increase in prime. And,
yeah,
and the government was really irresponsible in doing that. And that's where a lot of us, realtors, mortgage brokers, we're holding the proverbial bag on this. But the point is that we actually, if they were listening to us, they would never have dropped prime as far as they did. They would have increased prime, 25 basis points in September of 2022 or 2021, to prevent that final run up that ran all the way through April. In that time period alone, what we have, like a 20% real estate appreciation, and and then after that, literally pull the rug out from the whole market by beginning to increase prime at not only what's not a sustainable pace, but almost a criminal pace.
yeah.
Uh, to the point where I'm sitting here going, like, what are the real intentions of this? Like, are you intentionally trying to debase the market by increasing prime this way, and not sheltering homeowners? Considering real estate was the largest contributor of GDP to this country's per capita production and is now not, is a huge telltale sign of the policy mismanagement on this. So you can either say it was a policy mismanagement move to let real estate become your number one contributor to gross domestic product, or you can say it was a policy error and letting it fall off that mark.
Yeah.
And yeah, it's just one of those things.
So what you're saying, though, Jeevan, is that you're better off buying a resale than jumping in, because you've got more options, than jumping into a new build, correct?
Very much so. And the reason I say that again is because, even if you're buying a new build, so say you bought a new build 3 years ago, right? Last money in. And now you're going to close again. What used to be the benefit of buying at today's price, we're now seeing with our own eyes, and Justin, our generation has never seen this, right? But now we are seeing with our own eyes that holy cow, real estate can go down in value,
Yeah.
right? And it's like,
Yeah.
wait, what? Real estate can go down in value? And what's happening is so if you bought a place that was $2.5 million and you've got your 20% deposits in there of $500,000, and now the place is worth 1.8.
Well, there's a couple of subdivisions in Burlington alone. There's one particular I can think of, and I don't really want to out it, but we have a client that purchased at 1.7, 1.8. No one can sell them.
Yeah, remember when we talked about that one
Yeah.
before that person bought it at 1.7,
Yeah.
1.8?
Yeah.
And
But the point is that the builder's just going to sell it for what the price they don't care about what the future of the real estate holds, or they're not going to work with you to lower the price or renegotiate. They just want their money, and there's your contract, and that's the end of it.
well, by their logic though, Justin, by their logic, in the situation where the benefit was to the buyer side, they also did not get an opportunity to renegotiate or resell
Agreed.
the property.
Oh,
Agreed.
they didn't know. They
That's
didn't.
a risk we all take, right? And
Yeah.
it's like, I know Canada's very hard to call a democracy nowadays. It's more of a socialist country, but it's not, you don't get to have it both ways.
Right.
Uh,
No, and it's funny. Justin and I are laughing because we have a situation that arose yesterday, and it has to do with this very, very situation that the mortgage rates just went foom,
Mm.
and our values went boom,
yeah.
and
Because let's be honest, that can happen in residential resale as well. Right. You
Absolutely.
purchase this happened in 2016. We've talked about this before. I know you've had clients that dealt with that in 2016 where I remember distinctly what happened. April 20th, 2017. Our premier at the time, Kathleen Wynne, implemented some very specific policy relating to real estate and foreign buyers and things. In May of 2020, in April of 2020, we had 280 listings on the market, roughly. By the end of May, we had over 700 listings on the market in 30 days. That's the most insane thing I've ever seen in at the time, let's call it, 15 or 13 years of real estate I've been in. And people that had purchased in April, right? Prices were changing in the next 2 months, and mortgage brokers, and I wouldn't say brokers, but banks were shifting their way of pricing the properties for their appraisals.
yeah.
And it was creating scenarios where people couldn't afford to close on houses
because
because
they
the
had done
prices
a
were changing.
firm deal. The firm deals were still happening, and bango, yeah, I got and the frenzy and yeah, and then all of a sudden this happened, and it was quite interesting to watch. Yeah, touch wood, I didn't have any situations that happened to me, but oh my goodness, it was incredible because the consumers, the buyers, the sellers, they were just, okay, so what do we do financially? So
Yeah.
And there are solutions for that problem, but within reason.
Well,
yeah,
and beyond that, like even the project you and I were discussing a second ago, where that person at $1.7 million,
Mhm.
remember, I used to talk to you about those same places, but the price that they had on the board was 900K,
Yes.
right? And I was like, hey, Justin, like for 900K, I think I'll grab one of these.
yeah,
Sign finally goes up and they're starting at 1.4.
Mhm.
And going all the way up to 2. And it's like at the end of the day, real estate will always remain a function of the land that it's on.
Mhm.
And that is what truly holds value, in my opinion. Your improvement on that land definitely holds value, but that's depreciating value, where your land has appreciating
yeah.
value. So beyond that though, so the one thing I do want to just clarify for everybody, I made some notes as to what some of the main changes that have really taken place. So if it's okay with you guys, I'll just share those,
Go for
um,
it.
and then we can definitely expand on all of them. So we are expecting the Bank of Canada to reduce prime at least another 50 points before summer market, which should help the affordability of everybody. Now remember though, and we talked about this before as well, Justin. Everybody's got $5,000 a month they can spend. And, as much as we talk about interest rates and property values, at the end of the day, everything comes back to people's monthly budget. Cash flow is king. So, if we're putting ourselves in a position now where we have interest rates declining to sub 5% on prime, it is going to add some more liquidity to people. So because of that, theoretically speaking, we should start to see a reasonable appreciation in property values. Now, do I think we'll move into a frenzy position again, where 30 multiples and hey, Jivan, we can't put in a finance condition, make sure these people will be approved. And even then, remember when all of this changed, even back then, I was saying, hey, I don't need a finance condition, but I sure as hell need an appraisal one. Because you can pay whatever you want for a house, but the lender's only going to lend on what they believe it'll sell for in under 60 days that they have to take it from you.
Yes.
Another thing is extended amortizations. So now first-time buyers don't have to just buy new construction to be able to use a 30-year amortization. They can do so on any property they choose, and that can be up to a triplex, fourplex even, right? So you can buy a fourplex with 10% down today, and that's something that people that are first-time entrants to the market should definitely be looking at, because your first home is rarely your last. The insured mortgage cap we already discussed. That's where insurable mortgages. And Karen, I'm not sure if you were on the call at that point, but they've changed the threshold. What used to be $1,000,000 is now $1,500,000. So you can now buy a property of up to 1.5 million with that 125K down that we were discussing. If you're a first-time buyer, you could also take advantage of a 30-year amortization in that situation. Renewals. Right? So you've got more than 1.2 million Canadians renewing their mortgages this year. If I could just make a quick statement to all of them, do not sign the first offer your bank gives you. Banks, more than 6 out of 10 Canadians will sign back a bank's first offer without doing any comparison. As much as we're all led to believe that the bank is our keeper and the bank is our parent and the bank is our sibling and the bank is our best friend, none of those things are true. Banks work for shareholders, and their job is to maximize returns. So when they're sending out those mortgage letters, they are very well strategized to the fact that they know 6 out of 10 people are going to sign it back without negotiating. And more often than not, I'd say more than 9 times out of 10, you've left money on the table doing that. A simple conversation with somebody like myself at Circle Mortgage or another mortgage broker should give you a very quick idea of whether there's money for you to be saving or not. And don't get me wrong, banks are being very aggressive in this marketplace. So even when we're talking to customers about renewals, one of the first things we're saying to them is, hey, go back to your bank, let them know you're talking to a broker, and tell them to put their best foot forward. Because we've been in situations where we've done the work, and it's really unfair to us and to the customer to have a bank swoop in once we've sent our request for a discharge statement to all of a sudden be willing to play ball. And for the consumer that goes back to play ball, how can I blame them? This is all a time value of money function. Like, they need to save as much as possible on a monthly basis. So, but it puts us in a precarious contractual situation because we have a signed agreement and all that sort of stuff. And it just leads to unnecessary animosity because we've done the work, but they haven't paid for the work yet. So in that capacity, I think, a 5-minute conversation, and, we're both parts of the Burlington Dads and other groups here in Burlington. And, I have those conversations more often than not, at least a few times a week. And maybe out of those 3 to 4 conversations, one becomes an application. Why does it become an application actually? Because they need some more money. If it's just a simple rollover, as mortgage brokers right now in today's market, it is very difficult to compete with bank offers because it's simply cheaper to keep you. And the banks are wising up to that. So where previously a mortgage broker's business was built on moving their customer every 5 years, now we're almost kissing them goodbye at the door. Because there's a good chance they just aren't going to need us anymore. And that's just actual fact, and it's just a fact of the matter. Affordability concerns are still obviously a major issue here in Canada. If you're taking a look at your standard 39, 44% gross debt service, total debt service ratios, it's very difficult for people to qualify today, which is why I'm saying that people should really consider looking at the duplex, triplex models because they can purchase them high ratio and really offset a lot of their costs Fun fact, and Justin, you know this, the first piece of real estate I ever bought was a sixplex. And that sixplex has basically been my life raft ever since then. So as much as I was intending to live in one of the units and did for a short while, it wasn't the place for me to raise a family. So, back to Burlington we go. And it makes the most sense in that situation. So if you're comfortable at home and you've got $100,000 in the bank, and honestly, some of these young people's ability to save blows my mind. And you could put yourself into an owner occupied situation, plus getting, yourself a bit of a rental accessory unit or a duplex triplex long term. And again, Rome wasn't built in a day. This equity isn't built in a day. But I could tell you, I bought my place in '09. Since '09 to today, it's gone at least 5x, and I owe a very reasonable amount on it, to the point where, you and I have had conversations about other commercial real estate where it's like, okay, well, I feel like I need to activate the equity in this property and start to expand the portfolio again. And again, because I personally believe that there's no further degradation in prices coming. If you wanted the bottom of the market, it was a year ago. It wasn't now. It's not 3 months from now. And obviously listening to people that have their own opinions was always kind of comical, because we're industry participants. So, if you think that you're going to be able to buy that house in Heaven Forest for the same price that your parents paid, you're simply in the wrong country. Texas is calling. And
you know what? Texas is a great option. I've seen some great, I'm considering it.
Bro, I don't know if you know, I just got back from
have
Houston.
another question. I know we've gone way over time here, but I have another question. So if you have $700,000 sitting in investments, okay, just stocks, whatever, that kind of investment, and I'm not talking, would you financially say to someone, go and buy a multi-dwelling, put 20% down on that multi-dwelling? Because I've got to tell you, there's lots available in Hamilton right now. And put down 20%, and would that not grow faster than those investments sitting in the stock market or in, RSPs or whatever?
Sure. So our
I know
stock.
you're not a financial.
No, I read this stuff every day, Karen. Right. So I'm going off the opinions that I read.
I want people to understand. I want our viewers to understand that, that not only can you mortgage it now that you put 10% down, it's going to give you income, and you can even, as you say, live in one of the units if you want to, until you've saved enough money. But that's what I'm saying, is that 700,000 sitting in stocks is not going to grow, or it's at a higher risk than it is.
I was going to say the volatility of the stock market is completely different than the
Yeah.
volatility
Yeah.
of the real estate market, right? The
Yeah.
real estate
Right.
market doesn't move on a day-to-day basis the same way the stock market moves on a day-to-day basis.
Yeah.
Like,
Exactly.
Trump could tweet something tomorrow and the stock market could fall off a cliff, right? So, I mean, that's a completely different market. But I think I know what Jivan's going to say, but I think at the end of the day, for me, from a long-term investing strategy standpoint, real estate has always been a pretty solid investment.
Mhm.
I mean, Jeevan just explained that with the sixplex.
I'm not lying to you. I have not met a rich person that didn't make some money in real estate.
Exactly.
And,
Exactly.
and for the crypto millionaires, like, God bless you, way to catch a trend, and way to, hey, you know what? I got no hate for it. You figured out a way to make money. God bless you. As a matter of the stock market versus the real estate market right now, there is a substantial overvaluation in our current stock markets in the S&P and the other Dow indexes. And I was actually literally just reading this morning that the multiples, so the cash flow multiples that these things are trading at, are very similar to what they were pre-crash of the last 3 crashes. So, heads up, right?
Yeah.
Interesting.
I am not a financial planner, nor am I licensed in that
And
space.
I didn't mean to put you on, but
Yeah,
talking about
No, if you wanna
now
talk
that that
mortgages and
now
marijuana,
that
I'm an expert, but
now that now that that 10% now that that 10% is available, I mean, offered, I think that's fantastic because
oh,
it
all day.
gives get a mortgage and just sit in the multi-dwelling or a triplex or whatever it is you buy.
Forget you sitting in it. Forget you sitting in it. Like Justin, your kid's going to university. My kid's going to university. They turn 18 this year. It's time for us to co-sign for them and buy them a property in the town that they're living in,
So
right?
this actually leads me to a really great point where we will end here because we've gone way over time, only because Jivan has so much great information to share. Next month, we are hosting a panel on we've called it Home to Harvard. And the idea here is we know that there's a lot of people in Burlington and the surrounding areas that have kids that are coming up to college or university age. And we wanted to put together a group of people that know what the heck they're talking about when it comes to money to help us invest effectively in the right sources to be able to create a situation where we can afford our kids' education. Because I don't think that education is another thing that's getting more and more expensive every year.
Huge, huge.
So I
Uh,
can tell you, I've actually worked on a program for that. I
Of
about
course you have, Jeevan.
No, and we've talked about it before. So
Wow.
back in 2016, between 2016 and 2019, really, up to about 2020. And the basic premise was that if you buy a property in the town that your kid's going to school in day one, and let's say it's 400 grand, and you get an average of 5% annual appreciation, at the end of their 4 to 5 years of university, if the property was in their name, and they lived in it, they're going to have an opportunity to sell the property with no capital gains. That property should have appreciated using that 5 to 7% model by about $100,000. So there's $50 to $75,000 there after expenses and whatnot. That is a real nest egg. And that's a nest egg where you could have your child return the down payment to you, or you could let them keep it. And it's really an opportunity for them to start their life, or for them to pay you back for their education, right? So let's be real, right? Like 75,
So
100 grand, is not enough to get a kid all the way through the program now.
that's going to be our teaser so that you will come to our panel. And by the way, we're going to have a chef there who's going to be making fresh tacos, and also we have two fantastic financial advisors who are going to be there to discuss all of this. So please, Justin, when's the date on that?
Wednesday, February 26th, 2025, 6:30 p.m. If anybody's interested, we'll also put a little note below with an Eventbrite on there. You can sign up for a spot. It is a free event, so you can come and enjoy the tacos at your leisure and enjoy the great people that'll be on stage and talking about this stuff as well. So,
Well, you had me at
Jeevan,
taco.
you see, yeah, exactly. I was just going to say that's
By the
the
way,
whole reason we're doing this is for me
the
to get
chef
talking.
is fantastic. He's from South America, and he's just an amazing guy. So it'll be a lot of fun.
So
Yeah, that's
join us
awesome.
there. But in the meantime, Jeevan, thank you so much for coming on the call today. We've gone a little over time, so I apologize for
No
that.
worries.
But
If I have one request from your readers, and sorry, your watchers, is that we've won the Reader's Choice as Best Mortgage Company in Burlington for the last 5 years straight. And I'd love to make it 6. So if they get an opportunity to please vote for us for Circle Mortgage Group as the #1 brokerage in town,
That's
it would be awesome to turn that 5-plex into a 6-pack.
I like it. I like it. Thank you, everybody. Have a wonderful day, and we will talk to you on the flip side.